Hello, welcome back. You're watching Kalkine TV, live from Sydney. This is the Buzzing Trends Show. Let's look at some important news that's going to impact the markets now. The S&P ASX 200 is up today, gaining 66.80 points to 6,998.50. That's after setting a new 20-day low. It saw some of the worst sessions in the last few weeks. On Wednesday, the benchmark index registered a sizable decline of 1.9% and closed at 6,931.7, the lowest closing price since the 8th of April 2021. The index is expected to stay marginally higher today due to a weak finish of the Wall Street and lower commodity prices. 8 of 11 sectors are higher among the S&P ASX 200 index. Information technology is the best performing sector today. That's gaining today from what we can see, along with some other sectors on the ASX. We can see that information technology gained 2.56%. That was at 8 minutes past 12 at lunchtime today, Australian Eastern Standard Time. Let's look at some of the big news now from the airline space. Qantas is all set to report a loss of more than $2 billion for financial year 2021. A total loss of around $16 billion has been reported from the time COVID-19 started. This forced the airlines to take tough decisions like laying off people from their international workforce and also imposing a 2-year freeze on wages. A total of around 8,500 employees have already lost their jobs since the time the pandemic started. The loss of $2 billion is stated despite a recovery noticed in domestic travel, which is on the right track and is expected to reach 95% of pre-COVID levels in the June quarter. This is also supported by the visibility of all short-haul aircraft that are back in service. The company has also pushed its international travel start date to late December from late October this year, as it believes that international borders will reopen once the vaccine rollout is completed. This is despite the federal budget announcing that it's viewing international travel to start sometime mid-next year. Qantas still has a long way to go in its recovery, though it's slowly moving towards it. Moving on now, the unemployment rate has decreased to 5.5%. from 5.7% in March. That's according to the Australian Bureau of Statistics. Unemployed people count has almost decreased to 756,200. That's from 789,900 back in March. Participation rate has decreased to 66% from 66.3% in March. Monthly hours contributed to work has also decreased. That's up 1,793 million from 1,806 million in March. JobKeeper ended on the 28th of March this year, which was expected to see some people lose their jobs or change jobs. However, it was announced today that the change in employment and hours between March and April did not highlight a clear aggregate impact from the end of JobKeeper. Next big news now, Blue Origin Federation, an American privately funded aerospace manufacturer and sub-orbital spaceflight services company, announced that it had started bidding for a seat on its new Shepard rocket. Bidding currently stands at $2.2 million for a seat on the spaceflight. More than 5,000 bidders from around 130 countries have vied to ride on this flight, which will be going into space, scheduled for July this year. The company is trying to pioneer space tourism. They're confident it's a data collection and it's ready for operations after 15 test flights and 16 capsule landings in West Texas in the US. The company did not disclose the number of passengers that can travel in the first flight, but updated that it will be an 11-minute flight, which will take them around 100 kilometres into sub-orbital space. The proceeds from the auction shall be used by Blue Origin Foundation, whose mission is to inspire future generations to pursue careers in science, technology, engineering and maths. Moving on now to the next big news, which comes from the cryptocurrency space. Virtual currencies plummeted sharply on Wednesday, leading to a massive sell-off in worldwide crypto markets. Prices of top crypto coins such as Bitcoin, Ethereum, Cardano and Dogecoin tumbled sharply, combining value of almost 10,000 crypto coins tracked by CoinMarketCap shrunk by $1 trillion in less than a week to settle at around $1.3 trillion. The cryptocurrencies plunged to mark their worst fall this year after China's crackdown. Chinese regulators have tightened their restrictions on the use of cryptocurrencies by banning financial institutions and payment companies from providing services related to crypto. Next up, Australian agricultural chemical company Nufarm in the last 6 months ending 31st of March reported that their net profit rebounded to $59 million from a loss of $129 million in the corresponding period of last year. The group revenue was $1.65 billion. That's an increase of 20% from the corresponding period last year. Moving on now, petroleum company Ampol is to reach its target of net zero direct emissions by 2040 and has decided to collaborate with Tesla. This collaboration is to build a virtual power plant at 3 fuel retailing sites and a green hydrogen plant at its Brisbane oil refinery. The company is planning to spend at least $100 million on future energy projects by 2025. Moving on now, resource player Aluka Resources has withdrawn its production outlook for Sierra Rutile. The company will suspend operations at the project by the next year end. The next news, it comes from Australian agricultural company that reported statutory EBITDA profit rise of 24% during the financial year 2021. Net statutory profit jumped 45%. Now looking to a special report. Australia's wage growth shows signs of recovery, but the public sector remains fragile. The Australian Wage Price Index, which is a key indicator to gauge overall health of an economy, grew at a subdued rate in the first 3 months of the year. That was even as unemployment rate fell faster than expected. In January to March quarter of 2021, Australian wages rose 0.3%, slightly higher than estimates for a 0.5% rise. That's according to data released by the Australian Bureau of Statistics today. The index, which measures the change in hourly wages and salaries paid, registered an annual growth rate of 1.5%. That's above a record low pace of 1.4% in the December quarter of 2020. The tepid growth of pay increase is a matter of concern for the Reserve Bank of Australia, as it is a prerequisite to achieve sustained consumer price growth to maintain a accommodative stance for longer term. The RBA in its policy meeting on the 4th of May had maintained that the cash rate wouldn't rise until inflation was sustaining between 2 to 3%. To meet the RBA's inflation target, wage growth needs to rise above 3%. The public sector registered its lowest annual growth of 1.5% since the start of the series, as wage increase deferrals and a smaller hike impacted overall growth. Annual growth in private sector remains steady at 1.4% for the second quarter in a row, following a September quarter 2020 low. On a quarterly basis, the private sector wages grew by 0.6%, while those in the public sector rose by just 4%. Industry-wise, education and training recorded the highest annual rise of 2.2%, while all other industries posted lower annual wage growth than the year before. On a quarter-on-quarter basis, accommodation and food services recorded the highest quarterly rise of 1.2%. Electricity, gas, water and waste services, also rental, hiring, real estate services and arts and recreation services registered the lowest quarterly growth of 0.1%. Tasmania recorded the highest quarterly rise of 0.8%, with wage growth mainly driven by the public sector, contributing to the highest annual wage increase of 2% across states and territories. Meanwhile, Queensland, Western Australia and the Australian Capital Territory recorded the lowest quarterly wage index rise of 0.4%. The Australian Capital Territory posted the lowest annual growth of 1.3%. All states and territories recorded lower annual wage growth as compared to the March quarter last year. Stay tuned with Kalkine TV for more live market updates. We'll be back very shortly with more news on the markets, the economy, diverse themes and sectors. I'm Rachel, signing off for now.